What's up, everyone? Ben with the BTC Sessions here, and this is your daily session.
Hodl that Bitcoin.
Before we jump into the news, just a couple quick things. Of course, shout out to sponsors of the show, Ledn.io. This is where you can use your Bitcoin for a couple of different services. The first of which is a Bitcoin savings account where you can earn interest on your Bitcoin paid in Bitcoin. And the second of which is a Bitcoin-backed loan. So you can use your Bitcoin as collateral to receive a Canadian or US dollar loan. Some use cases of this are maybe you're in a pinch and you don't want to sell your Bitcoin. You're worried it might go up in price. Well, this allows you to get some dollars in your pocket without having to actually make the sale. And conveniently, it also doesn't trigger a taxable event if you're just using it as collateral. So something to look into. If you use the link down below and opt to get a loan, then they will credit you with an additional $50 worth of Bitcoin. And secondly, if you're into Bitcoin, then of course, privacy is important. And one of the things I use to help with that is NordVPN. Now, what this does is it hides your IP address, it helps encrypt your browsing data, and it has the added benefit of unlocking geo-blocked content. So if you want to check it out, there's a link down below where you can get the service for $3 a month. And with that, we are into the news. So there was quite the price plunge yesterday, and it happened post recording, so I didn't really get to comment on it in yesterday's video, but Bitcoin essentially shed about 20%, not quite 20%, but it came close. At the time of recording this, we're in around the $8,300 range. That's way down. We were in kind of like the $9,500, $9,600 range when I was recording yesterday, and it's quite a drop. It seems to have come from about a $1.2 billion sell-off. So you can see here there's a chart of some capital inflows into some exchanges where there were some large transactions being made, and then a subsequent sell-off of the subsequent sell-off of those funds, which triggered even more of a panic of other people selling. If you were following me on Twitter yesterday, I stacked the hell out of that dip. But where could it go from here? Well, and here's again the chart from yesterday where it just kind of boom. That was a hell of a drop. So we've got a round of predictions from a lot of people. So you saw people come out of the woodwork from a number of perspectives. Some people thinking, hey, this was the bottom around 8,000. So it dipped just barely below 8,000, and then it kind of rebounded back to the 8,400, 8,500, even 86, 87 for a little bit. There were people that were saying, being cautious, it might go a little bit lower, 7,500 perhaps. And then, you have the Peter Schiffs of the world where they're like, oh yeah, it's going to zero, $4,000 is next. And Schiff is always super right on all his predictions when it comes to that kind of stuff. So yeah. So again, I'm not super worried. This is kind of a blip on the roadmap, and we will get into a little bit further of long-term price projections in a model that I think is interesting. But first, I want to touch on something else. Yesterday in the show, we were talking about the drop in hash rate. So hash rate is a measure of the computing power that is backing and securing the network, the miners that are vying for the next Bitcoin block to receive their reward. And that kind of fell off a cliff the other day, or it appeared to anyways. It looked like the Bitcoin hash rate dropped by 40%. However, there was a quick rebound, and as of the time of recording this video, we're back up over 100. Is it 100? Holy crap. Yeah, we're back up over 100 terahash again. So we basically dropped off a cliff. We went down to like 65 terahash, which we were over 100 for quite a while, by quite a bit. Well, we're right back up. And so why was that? Odds are absolutely nothing happened with mining or miners shutting off anything, because I learned something new the other day, and that is this measurement of the network hash rate is not an actual real-time measurement of how many miners there are. What it is it's a guesstimate of the network hash rate based on how quickly blocks are being mined. And that can vary quite a bit. So on average, it takes about 10 minutes for a miner to mine a block. But every once in a while, you'll get a Bitcoin block that is extraordinarily more difficult than other Bitcoin blocks to mine. And it can take sometimes 30, 40, 50 minutes, an hour to mine a block. And those are outliers, but they do happen, every so often. Well, we just happen to get a few blocks that were quite a bit more difficult to mine the other day, which made it seem, because blocks were being mined less often, it made it seem like there was less hash rate on the network, but that was not the case. It was just slightly more difficult blocks and a few hit in a short period of time, and it seemed like the hash rate dropped off. But as we can see, it definitely did not. It's pretty much exactly where it was. So here's a nice little summary tweet storm from Nick Carter, and he said, I'll just sum it up with what he said here. This is the last week's worth of blocks ordered by interblock time, so how long between blocks. Typically 10 minutes, but that can vary. The orange line is the 144 block moving average. That little bump is what people are panicking about. So if you can see, I'll open it up bigger here. This orange line is the average over the last 144 blocks of how long it takes to mine a block. And you can see it's in line with kind of the 10-minute mark. These dots are all of the different blocks that were mined. And you can see fairly often there's an odd block that it outlies a little bit. But for the last little bit, there haven't been too many outliers that were longer than 40, 45 minutes. But in this last little bit, you see that there was one block that took almost, between 75 and 80 minutes to mine. There's another one that was probably in this 60 to 65 minute range. There was another one up above 50 minutes. So you have this kind of sudden surge of blocks that were slightly more difficult to mine, and that changed the trajectory of the interblock time. It took on average a little bit longer, and thus made it look like there was less hash rate on the network, when in reality all of the computers were still mining. It's just that it was a little bit more difficult to mine for a few of those blocks, especially on average, a little bit more than average. And it just so happened that it looked like computers were dropping off, but really it was a big nothing burger, kind of like I said the other day. But I did learn something new, that the hash rate measure is not a precise science. It's an average of how quickly blocks are being mined. And so you can't exactly see who's mining and how many people are mining. It's more of a guesstimate based on how quickly blocks are coming in. Now, I want to move on again back kind of to the price point. So we dropped down to this kind of low 8K range. And oddly enough, this lines up with something called the stock to flow chart, created by a guy that goes by the pseudonym Plan B. Now, this is the original Medium post that Plan B posted in late March of this year. And he was talking about stock to flow. So what is stock to flow? Stock to flow is how many, well, I guess it depends on what asset you're talking about. So in stock in general, how much stock or gold, how much gold exists and how much gold is being mined every year, or how long would it take to mine the entire supply of gold over again and essentially double it. And so he uses that metric to essentially try and graph the perceived value of the asset. And he used this, he tested it on gold and silver and other precious metals, and then he used the same idea to graph it against Bitcoin. And Bitcoin seemed to fall into that exact perfect model versus those other assets. And so what did his findings come to? Well, somebody's been able to actually model it all out in a live chart here, where you can actually go along and you can see that while it can go above and below because there's volatility in the market and manias and stuff like that, it does tend to quite nicely correlate with his model. And so right now, his model pretty much perfectly lines up with where we're at. So the 365-day model says that we should be at around 82.60 right now, whereas we are, 83.26. So pretty damn close. Now, the interesting thing is that when the stock to flow changes, when the halving changes and comes into action this coming May, so however many months out we are, like 8 months out from that, all of a sudden the stock to flow changes quite a bit because half as much Bitcoin are being produced. And that has a very interesting effect because it's the first time ever that Bitcoin's stock to flow falls below gold. It's also actually the first time ever that the inflation rate of Bitcoin falls below the Fed's target rate of 2%. So a couple major milestones. Well, what does the model show as that happens? Well, and the better one to watch here is the green. By the way, I'm super colorblind, so I think it's the green line. Anyways, the more sloping one. So as we get up to the halving here, you see this sudden change in the 1 day stock to flow. Okay, and so it changes the potential price here, and you see that over time, once it kind of starts to meet up, it's a projected value of $105,000, roughly over $100,000 per Bitcoin. And you can see kind of the same thing happened here when the halving happened in 2016. So all of a sudden it just shot up, and then the price followed kind of the curved graph of the stock to flow 365-day model and gradually made its way up to that line until it eventually actually met it in I guess December, and then obviously fluctuated from there. But more or less, it's been kind of following this model pretty damn well. So what Plan B projects through his model is that, yes, there are major overshoots and undershoots when it comes to this, but it eventually settles back down to that kind of stock to flow model that he's projecting. And after the next halving, we'll have that much more data to see if this model actually does indeed hold up. He says that we can typically overshoot from 3 to 10 times the projected stock to flow model after the halving. So immediately after the halving here, the stock to flow model had us. Should have been around. Where are we here? Okay. So again, like we did overshoot quite a bit on the stock to flow model last time. If we did the same kind of overshoot, then we could be in the realm of like a few $100,000 with a crash down below to, the $60,000 range or it really depends. But again, and then when you get beyond the next halving, the projected model has it up over, 1.3 million. And a lot of people look at these numbers and say, that's insane. There's no way the Bitcoin is going to be like over $1 million. But the people said the same thing about $1, about $100, about $1,000, about $10,000. And so I think people underestimate this kind of this juxtaposition of finance and exponential technology. We've never really seen these things combined where value is reflecting the pace of the technology's adoption. And do I think we could be over $1 million per Bitcoin in the next 10 years? I mean, kind of, yeah. Again, I don't want to oversell it because it's still it's still very early. We're only 10 years into Bitcoin. Things could go horribly wrong. There could be a 0-day bug in it and just confidence is lost and it sets us back years, or just the whole thing collapses, or, you know, government somehow does just crack down on everything and it becomes very niche and black market. But I don't know. I don't see this as out of the realm of possibility. It's kind of why I'm here. And yeah, I'm very interested to see what happens in the maybe year or so following the next halving, because it does take time. You know, we've seen the last couple halvings. It takes that time to kind of float up to where the stock to flow should be according to this model. But yeah, I don't know. Hit me up in 2021 and we'll see where we're at. Now, if you do want to hear more about this model, there's a very excellent interview by Stefan Livera on his podcast. I will link that down below, where he talks to Plan B. And Plan B does have quite a bit of experience in this realm, in the finance realm, and that's kind of why he wanted to get some real numbers and see if he could actually model this. And yeah, it's an excellent listen. I've mentioned it before, but do go and listen to this podcast. If anything, it's gonna give you some inspiration to stack some sats. And the last thing I wanted to touch on here is the Fold app. I've talked about these guys before. So back in, I guess it would have been 2014, 2015, when I first started getting into Bitcoin, this was one of the apps that I was trying out to, you know, like use Bitcoin to buy Starbucks and stuff like that, just as kind of a fun experimental thing. Well, a little while back, they added in Lightning payments, which makes it, again, super easy, because it was difficult when fees started going up. It was, you know, you didn't want to spend like a couple bucks to get like a $10 gift card. But now with Lightning, it makes it incredibly easy. But there's a couple developments there which are super awesome. So they are launching an actual mobile app. So before it was just like a web app on your browser. Now it's going to be an actual app. But they're also doing sats back. They're officially a sats back company, and they've added fiat. So what does that mean? Before, they did have some sats back, but you had to be spending Bitcoin to get like some of your Bitcoin back. Whereas this now, they're going to let you add a credit card. So you can pick up your Amazon gift cards, your Starbucks, Hotels.com, Burger King, Uber, whatever you're doing. You can pick up those cards or pay in store and get sats back for spending your dollars. Now that I love, because I'm not super keen on spending my Bitcoin right now. It feels too early, and I did a lot of that in 2014, 2015, and I look back and I think like, there were a couple times where I had like $2,000 Starbucks dates with my wife. And I look back and I think, God, if I could have just spent regular money and gotten Bitcoin back while I was doing that, oh my God. So super stoked to see stuff like this, because we've seen Lolly and paid PEID in the States. Now, Fold is something that Canadians can use, but you have to pay attention to which cards you're getting, because like the Amazon.com card doesn't work on Amazon.ca, but the Starbucks gift cards do work internationally. So it depends on the merchant. But super awesome to see that. And they're doing a thing where they're doing early access, so you can sign up to early access. I will add a link down below for that. And actually, they've got a thing where you can share a link, and the first, it's going to be tight. I don't know if some of you might not get in before before this goes up tonight. But anyways, if you do, you can get rewarded sats for sharing a link as well, and it'll also bump you up in the ranking for who gets access first, because they're going to be rolling it out gradually. So either way, even if you don't kind of get in for the early access stuff, check out Fold, because it is pretty intuitive. It is easy to use. Sats back are awesome. Or if you do want to spend some sats, you've got some Lightning Network tips, you can always utilize that with Fold as well. So I'm going to wrap up there. Thank you guys very much for watching. If you're new here, of course, hit like, subscribe, and share. Hell, if you're not new here, do all of those things other than subscribe, because you're already subscribed, of course. And always hit share. It's nice to have new eyes on the show. If you want to help the show in another way, hit either the sponsors, Ledn or Nord. Those links are down below. And if you really like what you saw, you can drop me a tip at my tipin.me page via the Lightning Network. Now, we'll see you guys tomorrow for your daily session.